Today, we're diving into arguably the most important savings account that every Canadian investor needs to know, the TFSA, or the tax-free savings account. So what exactly is a TFSA? Well, it's a special savings account introduced by the Canadian government that allows you to grow your money tax-free. Unlike a non-registered account where you have to pay taxes on your capital gains, if you invest through your TFSA, you won't have to pay taxes on any profits you make. Let's take Damien and Sam as examples. Let's say that they both did the research and bought one share of Apple at $100, and then they sold that share at $130. The capital gain on that investment would be $30. However, let's say that Damien bought his share of Apple through his TFSA. Then in this case, Damien would not have to pay any taxes on the $30 capital gain and would keep the whole $30 in his pocket. But then, let's say that Sam bought his share of Apple through his non-registered account. In that case, Sam would have to pay taxes on his capital gains. So in reality, he doesn't keep the whole $30, he only keeps, let's say, $25 because he has to pay taxes on that capital gain. As of 2023, 50% of any capital gain made in a non-registered account is taxable. So 50% of the capital gain is going to be added to your yearly income, which is then taxed depending on your tax bracket. Now that we truly understand the power and benefit of a TFSA, let's see how it works. You can open your TFSA with any financial institution, whether it be the big banks like CIBC, TD, or RBC, or an online brokerage like Questrade or Wealthsimple. It's available to any Canadian resident who's over 18 years old, and there are no minimum requirements. All you need is your social insurance number and you're set. Once you have your TFSA account set up, you're ready to start contributing, which basically means transferring money from your bank account to your TFSA to start investing. But there's a little caveat that you have to keep in mind. The Canadian government sets an annual contribution limit, which is basically a maximum amount of money that you can transfer from your bank account to your TFSA every year. They do this because if not, everyone would invest solely through their TFSA and avoid paying taxes altogether. So the cool part is that if you don't max out your contribution space for a particular year, the unused room carries forward to the next year. So let's say, for example, that you just turned 18 in 2023 and only contributed $4,000 out of the allowable $6,500. Then for 2024, your contribution limit would be the contribution limit of 2024 plus the unused contribution space from the previous years, so the $2,500. Also, don't worry if you didn't open your TFSA right when you turned 18, because as we said before, the contribution room is cumulative. For example, let's say that you turned 18 in 2017, then your total contribution limit would be the sum of all contribution limits from 2017 until the current year. Now here's another cool thing about the TFSA. Unlike an RSP, with your TFSA you can withdraw money at any time for any reason without paying any penalties or taxes. A commonly asked question is, if I withdraw money from my TFSA, do I lose that contribution space forever? Well, the short answer to this is no. You're not going to lose that contribution space forever, but you only regain the contribution space in the next fiscal year. For example, if you had already contributed $15,000 and withdraw $5,000 in 2022, your maximum contribution limit for 2023 would be the $6,500 cap plus $5,000. So $11,500 instead of only $6,500. But now, let's imagine that you initially contributed the same $15,000 and lost $5,000 on a risky stock. You decide investing is not for you and withdraw all your remaining $10,000. Now, since you withdrew at a loss, your total contribution room is equivalent to the amount you withdrew, so $10,000, plus any additional contribution cap from the following years. It's important to keep track of your deposits and withdrawals to avoid over-contributing and being penalized. If you do over-contribute, the CRA is going to fine you 1% per month on any additional contributed cash until you fix the problem. Now let's talk about the power of investing within a TFSA. One of the great things about a TFSA is that you can invest in a wide range of options just like any regular investing account. You can invest in stocks, ETFs, mutual funds, GICs, and much more. But you can tell that the Canadian government pushes for a safer long-term investment strategy by implementing rules like banning day trading and making losses non-tax deductible in a TFSA. If you follow all the steps mentioned in this video and do your due diligence before investing in any assets, your TFSA can kickstart your investment journey by allowing you to keep 100% of your capital gains without paying any taxes on them. And then you can even reinvest that capital gain to maximize your growth. If you found this video helpful, please consider subscribing, and I'll see you in the next one.